quick video today where I want to talk about real estate, as I haven't talked about it for a while, but still an interesting topic that should be part of every serious investor's at least thinking process, right? You may not want to invest in real estate, but I think you should consider it and look at it. And when people talk about it, they often get very emotional, right? Now, in this video, I really want to focus on real estate for investment purposes. Now, if you buy real estate for your own purposes, to live there and enjoy it, that's a whole different story, right? There, the numbers, well, they do matter to a certain extent, but obviously there's also the emotional component, feeling comfortable, and you want to pay a bit premium just because it's a nice place, fine, right? So there, I'm not really too focused on the numbers. But from an investment point of view, numbers do matter, right? The same how we talk about when we invest in stocks, ETFs, crypto, we want to look at the fundamentals, performance over time, and many aspects and factors that go into evaluating whether it's a good investment or not. So the same in real estate. And obviously I could do a number of videos around this topic, done a few in the past already. You can check that out afterwards. I have a playlist over real estate. But in this video, I want to speak about one very crucial thing that I think a lot of people tend to forget. And that's the rental yield. And a lot of people, especially here in Dubai where I'm based, right, they always throw at you the rental yield return that you get as an investor. And it's a good sort of indication of how profitable an investment could be. And we hear really high numbers. I mean, first time when I bought a few years ago, they said you can get 10% rental yield, which is crazy when you hear it. I'll show you in a second how that works basically. But just to put it into context, I mean, if you compare it to, Germany, for example, where I'm from originally, if you get, after taxes, a 3-4% yield, that's already considered pretty high, looking only at the rent versus your investments, right? I'm not talking about capital appreciation. That's a whole separate thing, purely the passive income in a way from your rental properties. The same way, think about it like dividend shares, hopefully over time appreciate. But in the process, while doing so, they do pay you a regular dividend. And that's a dividend yield, right? It's basically the dividend that they pay you as a percentage of the stock price. So the same is true in real estate. So essentially, when we look at it, basically is the rental price divided by the price you bought it at. And here I'm actually giving you some calculation from my own unit that I have over here in Dubai that I've been renting out. And I actually have two units and I'll show you how they differ depending on what numbers you look at. So for example, the first one has been rented for 80,000 around. It was like 82,000, but let's say for round numbers, 80,000 dirhams. You can run your own numbers afterwards, but just to understand, you basically take your rent and divide it by the purchase price. Again, at the time, it was like 1 million dirhams, which is around 250,000 euros, up or down. Obviously, there was a little bit of some transaction fees, but more or less 1 million dirhams, which at the time, when I rented it versus my investments gave me an 8% yield, right? So basically 80,000 out of 1 million is 8%. So that was my yield on cost, which is honestly really high. As I said, now maybe at the high end, you hear people saying about 9%, 10% even in Dubai is really unheard of. But 8% at the time was really attractive. I was very happy with this. Of course, we don't have any taxes in Dubai as such. There are other fees like service charges and so on that you as an owner would be paying. But generally 8%, very, very attractive. However, the problem is that I see too many people focusing on that they basically in the future will take, the higher rent and still divide it, even 5 years later by the purchasing value. And that is a way of doing that, but I don't think it's really the correct way. And I'll show you why. Because in my eyes, you should take the market value. So I'll give you the second example. Right now, as it's also actually my properties, you can see now the second unit that I have is about to be rented for 100,000. Again, it's like 98 or something, but let's say 100,000 for the sake of the exercise. But the same value of the property that I bought, a couple of years ago at 1 million. So basically the same one, just two different towers, bought them the same price, and they both now increased in value. It's actually over 1.6 million. It's like 1.7, depending on where you look at, maybe 1.8. But again, I want to be conservative. So let's say if I want to sell it today, I'll probably get 1.6 million for it. Now, if I take the increased rent of 100,000 over 1.6 million, all of a sudden, it's only 6.25%, right? So the problem is too many people will take 100,000 over 1 million, which would mean, wow, I make a 10% yield. But I don't think it's correct because ultimately, I want to equate it for what I'm getting for my money, right? Because if I was to sell my unit right now, 1.6 million, I take it out and put it into a bank account, I could be getting right now in the UAE 4.75%, close to 5% if I locked it up for a little bit longer. So that's the yield, the return I'll be getting on that amount of capital. So I can't really take an old number because prices do go up. Yes, the price in real estate would also up, but so have other prices, right? If I put the same 1 million into the markets, invested a 10% return, let's say S&P 500, that would have also appreciated, right? So it wouldn't be fair to base myself on a purchasing price few years ago. And I think that's really misleading. But sadly, too many agents and people talk about this 8%, the yield on cost, whereas I prefer looking at the yield on market rate. What can I get right now on my capital? So if that number, let's say, was to drop even further to 5% or below, at that stage, I'll be asking myself, am I really maximizing my capital? Because it is tied up in that investment that, let's say, would only return me 5%. And on top of that, I still have the service charge and so on. I have an agency managing it to a point where it does not really become that profitable. I might actually be better off just putting it into my bank account and receive 5% on my cash every single month without any worries or any fluctuations, right? Probably I wouldn't do that. I would invest some of it in the markets or something else or buy another real estate property. I think that's a very important number to look at it. Don't only look at the yield on cost. I think that can be very misleading. It's nice for brokers to say and throw these numbers around, but you should be looking at the yield on market price because that's what you'll be getting right now. Same with the dividend yield. Some people look at the yield on cost. It's a nice number to say, well, I'm now having a yield on cost of whatever high percentage is usually higher, right? Because the prices were much lower in the past. But as all the prices going up, I think it's important to look at yield on market price or market value because that's really how you can measure, are you maximizing the return on your capital? And ultimately, that's what we really want, to invest long-term and put our money and capital to good use. And as you can see in my example, honestly, the yields have come down a little bit. For now, I'm still okay with it, 6.25%, because the capital has also grown, because the market has also appreciated and real estate has appreciated. But honestly speaking, I don't think from 1.6 million, I'm ever going to see, a value of 2 million for a one bedroom in the UAE. I just don't think so, especially now there's so much supply coming into the markets. So I'm actually, from my side, considering to potentially exit that and then relocate maybe into a new off-plan property, or together with my wife buy ourselves a nice, bigger home over here. So that's something we kind of looking at. But yeah, I think if I would only look at the 8%, or in my case now it would be even 10%, I could sit here and say, wow, I get a 10% return. But that's not really the case because it's not worth anymore 1 million. It appreciated to 1.6. At 1.6, I could be putting to much better use elsewhere. So yeah, that's just something I really think you should be keeping in mind. Obviously, there's so many other factors in real estate, right? It's hard to generalize it. It really depends on which country you're buying and taxation and write-offs. And I mean, it's really a huge topic in itself, but I just want to encourage you, run those numbers, whether you think you would be buying some real estate in the future or you already have 1, 2, 3 units. Definitely run those numbers on the current market value and see really realistically. I mean, don't lie to yourself. I always like to kind of conservative a little bit, put the market value down. Too many people, over exaggerate the market value or the rents they might be getting in the future. So be a bit conservative, run those numbers and see what percentage you get. If you get 3 or 4%, honestly, maybe it's really time for you to consider it, right? Again, if you do it because maybe one day you want to move in there, or you just really have a diversification because you have already so much in stocks or ETFs, then fine, right? To diversify, I'm all for it. But if that's your only investment that generates you a 3% or 4%, yield on market value, maybe it's time to exit the position or, reinvest and upgrade it to get a higher yield. But yeah, that's just something to keep in mind. Of course, again, capital appreciation, that's out of the equation because that's also very hard to predict, right? Nobody knows what the market will do. I just spoke to my agent here and said, do you think I should be selling it now, next year? How do you think the market develops? They said, well, that's like ask me the price of Bitcoin, in 3 months from now. Of course, nobody knows that, right? So definitely run those numbers for you and see where you stand. And it would be really interested to hear from you if you're already renting out or have some, investment property. Depending wherever you are in the world, let me know in the comments down below. I'll be happy to hear from you what kind of, percentage returns and yields you're looking at on your units. It would be very interesting to compare it to UAE numbers. I know in Europe and other parts of the world, they would probably be less, but maybe some of you from other parts of the world have even higher yields. So I'll be interested to hear from you where that is so we get some ideas. So if you enjoyed the video, give it a like, subscribe to the channel, helps out a lot. Next up, check out this video right here. As always, thanks for watching, stay healthy, get wealthy, and I'll see you in the next one. Ciao.